Welcome back, everybody. We're here with Gary Masur with TD. Gary, welcome as always.
No stranger.
Oh, thank you. Appreciate being
our
included. Absolutely. Happy to help.
Now, last time we had you on, we were talking about how the sky is not falling. We had these mortgage changes coming in,
Right.
and we were all caught up on this initial set of mortgage changes. Maybe just give us a quick recap on that, but more importantly, we also have these overlooked changes that didn't get a lot of press, didn't get the same sort of attention, but do matter nonetheless.
Absolutely.
So take us through the initial changes again, and then maybe bring us up to speed on what we should be watching, keep an eye on now.
Yeah, thanks again. I really appreciate the partnership and anything I can do, as always. So yes, the changes, I call them the October 17th changes. As far as the qualification on a mortgage, when it's high ratio, you have to qualify at the prescribed 5-year mortgage rate, which is currently at 4.64.
Right.
So the client doesn't have to pay 4.64, but they have to do what's called a stress test and say, can you afford your mortgage at 4.64?
Right.
And I did get a note at the last second. Jessie Bilodeau, she did a great job on the did you know the questions before the
Nice.
CIR live. So she wanted to stress that although that's a requirement, TD can still qualify clients at the contract rate for a conventional or non-insured mortgage. So
Perfect.
She said there was a lot of misunderstanding there and wanted me to just highlight that fact. So TD can qualify, can make a big difference for sure.
Great. All right, so what's going on? November 30th, there's other changes that happened.
Yeah, it was interesting because the October 17th changes had the big flash, but then there's these November 30th changes that really could fundamentally change things more so. So what's happening is they're saying that the government has made a change to, if you're going to take your pool of mortgages, any institution, including banks, monoline lenders, anybody, and going to sell them off as investments, they are always need to be bulk insured. But now to get that bulk insurance through an insurance like CMHC, all those mortgages inside are going to have to qualify as if they were CMHC insured. For example, it's got to be a purchase for a primary residence, so not a rental, not a refinance. Purchase price of less than $1 million, amortization of 25 years or less, a credit score greater than 600, and then qualifying rate of 4.64. So in order for those mortgages to be qualified to be bulk insured and then sold off, they're going to have to meet those criteria. So it means that if you're a lender that's your primary use of the mortgages to bulk insure and sell them off, then any mortgages that fall outside of those criteria, I'm not saying they can't be done, but they're going to be less profitable, so they have a much smaller appetite to do those mortgages.
I know that we've had so many, and this is great, but we've had an absolute ton of brand new realtors to the industry join us, and a lot of them are online right now. So in very, very layman terms, give an example of a very specific property that would fall into or out of that category.
Purchase price of $1.025 million. It would be, no matter how much the mortgage is, it's a purchase price, so that's not something that a lender like CMHC by government rules can insure. So that would fall outside of those.
What about a rental? Somebody trying to purchase a rental property
would fall outside those requirements as well. And if the client qualified at the contract rate but can't qualify at the 4.64, those would fall outside there as well.
Right.
So basically, these other lenders that might not be as cash rich about having term deposits, things like that from general clientele to be able to fund, it could be in a position now where they need to try to find money elsewhere at higher risk because CMHC is not willing to back it anymore. So now they have higher risk coming in. So then the people lending the money to fund these mortgages are going to want higher rates of return, which could mean higher interest rates, and like you said, less appetite. So it could be some big implications moving forward where these normal lenders are less likely to do the unconventional product.
Right.
That doesn't meet those CMHC tests.
Exactly. And I want to be clear, banks like TD, we do the bulk insurance and sell off these as financial products as well, but it's not our primary source. And I say, I'm a simple guy. We have a little old lady that walks in with a term deposit for $500,000, and we lend it out in a mortgage. We're a middleman, and that's our primary source of where we get our funds.
Right, right. So Gary, thank you so much for that. Do you see any actually for if there were to be any changes and implications for this, things of it hitting the marketplace, do you see that starting to take effect right now, or we'll kind of watch it in the new year and see if these other lenders do pull in the purse strings a little bit?
It's a great question, and it definitely, the mortgage market is in a lot of flux right now, and it's like, well, what about this, what about that? So that flux, we're saying TD is, as always, open for business.
I like it.
We're not subject to these restrictions nearly to the same degree, just a minor degree. So we're saying, hey, we're open for business. If your lender is saying that we can't do more than 25-year amortization anymore, well, we can conventionally. They have to qualify conventionally at 464. Well, no, that's not the case. So just be aware that there still are options out there, and it doesn't impact the entire market equally.
So for realtors who are working with clients looking to purchase something outside of the conventional window, what would because that's probably what's going on in the chat right now, is for people with those clients, what advice as a realtor, I guess, would you say that they should be talking to their clients with before they're even considering those purchases? I guess sit down with somebody and just have a big conversation.
Yeah, you answered your own question.
I guess.
I would say definitely. So our TD Mobile Mortgage Specialists, we do things differently. We're going to meet directly with your clients, and we're probably going to meet them in a branch that's convenient for them. I say, hey, Starbucks, it's a great place to have coffee, but not really a great place to be talking about personal information, income, and credit issues, something like that. So we're going to say, hey, what branch is close to you? Maybe we'll come to your house, but it's going to be what's convenient for the client, but also what's going to be private and professional as well. We're going to talk to those clients and give them specific advice based on their individual situation. And one of the great things, even conventional, high ratio now, there's no longer an ability to qualify for more just because you're taking a 5-year term. It's a double-edged sword, but I always look at the glass half full. That means that clients are no longer forced to take a 5-year mortgage.
Right.
Which means, and I say the facts are that majority of 5-year terms do not go to maturity. They're paid out in some sort of fashion. So clients come to us later and say, I got a 5-year mortgage, I'm faced with a large payout penalty, what do I do? And it's kind of like, well, it's kind of too late. Like, you should have, they really needed to look at that beforehand and get some advice. Was a 5-year right? Maybe it is, but maybe a 2-year, maybe it's a line of credit.
What, people that move every 5, 10, or 15 years? Right on the letter?
Well, and it slows down business as well. I'm sure there's realtors out there that talk to clients that would like to move, but they're like, oh, we can't now because we're faced with a big penalty, or we can't do this, we can't do that. Slows down the market as well. So why 5-year is my first question, first and foremost.
So I think my advice to you guys, there's lots of you guys that are using our TD partners and mortgage reps and mortgage specialists right now in your business, which is awesome. Lots of you have other relationships, which is totally great as well. Just one of the things I want to say is that if you get a client that's you're not really sure, get an educated second opinion and throw it by one of our TD reps. There's a lot of things that advantages the TD offers that you can get it in there. So just because we always recommend having a number of lenders in your pocket or a number of partners in there and stuff for different circumstances. But if you're not working with TD right now, get that qualified second opinion. I think they'll love to meet with you guys, give you some advice, and they're on the Quick Connect. Make sure you use them. If you're sitting at the table with somebody, or you're just meeting with a client, get on the Quick Connect and ask them the questions you need.
You bet.
Especially regarding the stuff that's not as common.
That's a good point. You have a financing question within minutes. Somebody will be back to you if you're sitting with your client. That's pretty great service.
Yeah, absolutely. Love to. And so we love that advice. We're going to sit down. We're going to give the client advice. And it's a lot of emotion as well. Well, things are uncertain. Should we be buying? Should we be selling? Hey, well, there's lots of good things. Why did you make the choice? We're also going to say, hey, you've made a good choice in dealing with the CIR realtor for this reason, this reason, this reason. So it's not just doing the deal. It's reassuring the client, holding their hand, and making sure that the transaction goes as smoothly as possible and that they feel good about their choices that they make.
Fantastic. Fantastic. Gary, as always, absolute pleasure having you on. Thank you so much for the advice.
Appreciate it.
Thank you for keeping us up to date on some of the changes that people should be looking at. So
you bet.
We're going to be right back with Gary Williamson talking about some things you might not have known and that you could do with prospects. We'll talk to you guys in a bit.
Thanks,
awesome.
Gary.
Thank you.